Have you ever wondered what would happen if the world's largest economy suddenly couldn't pay its bills? It sounds like the plot of a disaster movie, but it's a real-life drama that plays out in Washington, D.C., and it's called the U.S. debt ceiling crisis. Today, we're diving deep into what this means, not just for Americans, but for every single one of us around the globe. This isn't just about numbers on a screen. It's about your savings, your job, and the stability of the entire global financial system. So, what exactly is the debt ceiling? Think of it like a credit card limit for the U.S. government. It's a cap set by Congress on the total amount of money the country can borrow to pay for things it has already decided to spend on, like Social Security, military salaries, and interest on its existing debt. It's not about approving new spending. It's about paying the bills for spending that has already been authorized. For decades, raising this limit was a routine procedure. But in recent years, it's become a political battlefield, a high-stakes game of chicken where the consequences of failure are catastrophic. When the U.S. gets close to this limit, the Treasury Department has to use what they call extraordinary measures to keep paying the bills. This is like shuffling money between your checking and savings accounts to avoid overdraft fees. But these measures eventually run out. The date they run out is called the X date. When you want to buy something from another country, chances are the transaction at some point involves the US dollar. This global dominance is built on trust. The world trusts that the US will always pay its debts. US Treasury bonds are considered the safest investment on the planet, the bedrock of the global financial system. They are the ultimate risk-free asset. A US default would shatter this trust in an instant. Let's paint a picture of what would happen if that trust evaporates. First, global markets would panic. Investors holding U.S. Treasury bonds would see the value of their safest assets plummet. This would trigger a massive sell-off, causing chaos not just in the bond market, but across stock markets worldwide. We're talking about a financial crisis that could make 2008 look like a minor hiccup. Pension funds, retirement accounts, and individual savings tied up in these markets would take a massive hit. The interest rates the U.S. has to pay on its future borrowing would skyrocket because investors would demand a higher return for taking on more risk. But it wouldn't stop there. Since U.S. interest rates are a benchmark for the entire world, borrowing costs for everyone, everywhere, would go up. That means higher interest rates on your mortgage, your car loan, and your credit card, no matter where you live. This would slam the brakes on economic growth globally, pushing a fragile world economy into a deep recession. This mass sell-off would cause the value of the dollar to crash. For Americans, this means imports would become incredibly expensive, leading to high inflation. For the rest of the world, it would be a mixed bag of chaos. Countries that export heavily to the U.S. would find their goods suddenly too expensive for American consumers, crushing their export industries. Conversely, countries that owe debt in U.S. dollars would find it easier to pay back, but the overall economic instability would likely outweigh that small benefit. We could see a return to a more fragmented, barter-like system, which would be disastrous for global commerce. The geopolitical implications are also huge. A weakened America, hobbled by a self-inflicted financial wound, would lose influence on the world stage. It would create a power vacuum that other nations would be eager to fill. The balance of global power, which has been relatively stable for decades, could shift dramatically and unpredictably. Alliances could be strained, and international cooperation on critical issues like climate change and security could falter. You might be thinking, this sounds too crazy to happen. Surely they'll come to an agreement. And historically, you'd be right. In every previous standoff, Congress has managed to raise the debt ceiling at the 11th hour, pulling the world back from the brink. They know the consequences of failure are unthinkable. But the political divide has grown wider, and the willingness to use the debt ceiling as a bargaining chip has grown stronger. The risk of a miscalculation, of one side pushing too far and accidentally tripping over the edge, is very real. Even the repeated brinksmanship itself causes damage. Every time we get close to a default, it creates uncertainty. Global markets get nervous, borrowing costs tick up slightly, and it chips away, little by little, at the world's confidence in U.S. political and financial stability. It's like crying wolf. Even if the wolf never comes, people eventually get tired and wary of the shepherd. So what's the solution? Many economists and financial experts argue that the debt ceiling itself is an outdated and dangerous mechanism. No other major developed economy has a similar system. Other countries' governments are simply authorized to borrow what is necessary to pay for the spending their legislatures have already approved. Abolishing the debt ceiling would remove this recurring threat to the U.S. and global economy. But that, of course, is another political battle. For now, the world watches and waits every time this political drama unfolds. It's a stark reminder of how interconnected our global economy is, and how political decisions made in one capital can send shockwaves that are felt in every corner of the globe. The U.S. debt ceiling isn't just an American problem, it's a global problem, a ticking time bomb at the heart of the world's financial system. Understanding these dynamics is crucial for all of us. It helps us see the bigger picture behind the headlines and appreciate the fragile nature of global economic stability. We can only hope that policymakers act responsibly and remember that they are not just gambling with their own economy, but with the economic well-being of the entire world. Thanks for sticking with me through this deep dive. It's a complex topic, but an incredibly important one. If you found this explanation helpful, please hit that like button and subscribe for more content that breaks down the big issues shaping our world. Drop a comment below with your thoughts or any questions you have. See you in the next video.